Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on some volatile movers as we head into this shortened week with the holiday tomorrow on Monday. As many of you know at this point, I forgot to pack my mic wire, so using a lower quality mic for the time being. So we're going to look at SPCE, Tesla, Roku, LK, BYND, NVDA, Work, and Shop. These are voted on by our members. These receive the highest number of votes, meaning they have the most interest, and I ranked them on the left. SPCE has the most interest, and Shop lesser interest. So looking at SPCE, we know we are in blue sky breakout, and we know the power of blue sky breakout to make things irrational. And in my opinion, we are going to see the same kind of action on SPCE that we saw on Tesla, with a huge run up, a big climax, and then an easy 20% pullback. The question is, where does that top take place? So we are getting to extreme levels, absolutely. The lesson with these kinds of moves is it can always go further than you think it can. We have a scenario where reality detaches. Everybody's looking towards the future. Same thing with the marijuana sector and Bitcoin. Everybody was disregarding what's happening here and now. They're looking to the future potential. There's a lack of resistance. Everybody's piling in. And then we get to a point where reality does not align with the current market cap. And we reach a point where these scales tip, where right now, supply of shares is easily being eaten up by the demand for shares, and eventually we will see that change where the demand for shares will be lesser than the supply of shares, and we will then pull back. So at this point on the daily time frame, we could pull back, and anything above 1804 is a daily high or low. So we're not at risk of losing that daily uptrend anytime soon. You look at this volume and you say, well, is that our climax volume? And normally, if I want to call something climax volume, I want to see an upper wick or some sign of profit taking. And we don't have that on Friday's candle. We can see that we did see a previous climax and we did close strong a few weeks ago, and that did lead to consolidation. So making note of that, but we could easily see a gap up open on Tuesday. And at this point, if not in a bullish position, I would only be looking for short-term day trade bullish positions. On a move this significant, we know that the first 5-minute time frame that hits oversold sees a significant bull move, and here we go with 5-minute oversold conditions end of Thursday, big follow through on that bounce, and then the first hourly oversold conditions that we see once that temporary top has been hit, we will see significant buying there as well. And again, just going to Tesla as the example, hourly time frame with extended hours on, dropped down right to oversold when we bottomed out just around 700, and we ended up going almost 20% off of that low. So keeping an eye out for the first 5-minute and hourly oversold conditions, because you don't want to be chasing up here and buying just before the climax top. So short-term bull trades, as far as timing the bear tops, it's extremely difficult to do. And if you're going to attempt to do it, you must use stop losses, because if you don't, I guarantee there's someone out there who tried to short the double top here at 24.48 and 24.69, and they are currently 20% plus underwater on that short. You have to exit shorts if you are wrong. The only way that I will short a name like this is if I have a clear resistance level to be going off of. So if we have a resistance where we top out at 28.23 and then we see a bull move and we got up to 27.88, if I'm going to look for a bearish entry there, my risk is literally under 40 cents because I'm going to stop out if 28.23 breaks and we hit a new all-time high. So it's just a rough example. We're keeping risk very small, keeping those stop losses tight. So if you're wrong, you don't break the bank is the only way to do it. And just as a general rule of thumb, I would say if you have not been trading for years and have confidence, don't try to short this move. Just look to buy perhaps the first hourly oversold conditions that we do see. So absolutely no sign of weakness right now. The end of the day Friday, we did see some further upside, so potential for a gap up open on Monday, or Tuesday I should say. But again, no buying up here unless it's just short-term day trade flip positions. Otherwise, we will be looking for a daily higher low to form sometime later this week. Also earnings. Earnings perhaps will bring things back to reality, where maybe people look at the earnings and say, oh, we're a bit further off from profit than we thought. This is going to be a bit longer road, and we'll see if that ends up bringing things back to reality or not. Tesla. So Tesla had its insane move, it had its big pullback, and now we've seen a tightening range that is keeping the bulls in control. Look at this daily 12-period exponential support. And again, I cannot stress enough, I've done it 100 times, I'll do it again. The 12-period exponential support with the 26-period as a visual guide on all time frames has been very, very useful for me over the last couple years since I started using it from the cryptocurrency space. And looking at Tesla, every little daily higher low that we've seen over the last month has bounced either right on or right above this exponential moving average. So it keeps it very simple. I can say, as long as this exponential moving average is support, the bulls have complete control. It's a very simple if-then statement. So right now we have the clear resistance of 820, and that has been a triple top at this point, where we hit 820 on the initial bounce from the daily low. We then pulled back notably. We hit 818, and I guess it's only a double top at this point. On the 4-hour time frame, it certainly still looks like the bulls are just fine. So I'm going to be watching for a break of 820 early this week, and the bulls obviously want to break it the sooner the better to knock out that double top. And after 820, the next resistance level that we're going to be looking at is 846 and then 900 psychological. So as long as these higher lows are maintained, 735 is now the most important daily support level. The weekly chart was an inside bar. It can break bullish if that 820 level breaks. But again, bulls want to see that 820 break ASAP. If we fail to break 820 to start this coming week and break the low of Friday, 775, we know that that's a more notable shift in momentum away from the bulls. Pretty much have to hold 775 and break 820 to keep full short-term momentum in their favor. So no sign of slowdown yet, and that break of 820 will ensure control of the bulls is maintained. Roku, tons of profit taking. So we've been watching Roku on the long-term time frame and looking at the 2-week chart for clarity on this equilibrium, where we have the high, low of the pullback, lower high, higher low was set as soon as we had a bullish reaction to earnings, but a big upper wick and tons of profit taking all day Friday. Huge bearish engulfing candlestick. Price went from 148 all the way down to 128 during trading. That's a huge pullback. Technically speaking, the daily higher low is still intact. Anything above 123.90 is a daily higher low. So we're going to be watching for an hourly bounce to attempt to take place. Let's look at extended hours. So got right to oversold. As soon as we see that oversold, little short-term bounce. Anything under the high of Friday will just be an hourly lower high. If we break 127.40 on Tuesday first thing, that hourly RSI will quickly be back to oversold, and we'll be looking for the potential of a bottom fishing play off of 123.90 support if those hourly conditions remain. If we can hold 124, make that 127.40, then we'll look for the daily inside bar to form on Tuesday. That's pretty much what the bulls are hoping for. Just put a stop to the pullback, form a daily inside bar, see a tightening range, and again, we would just be looking for an hourly lower high on any bounce follow through. Pre-market on Tuesday is going to be giving us a nice little setup in terms of determining the likelihood that 127.40 can hold or not. If we're going to open at 132, it's more likely to hold. If we're going to open at 128, it's less likely to hold. So pre-market will have an important impact short term. LK, so look at the weekly time frame, multiple weekly inside bars. Even if we break these inside bars bullish, I would expect a weekly lower high compared to 51.38 because of the percentage move here, the size of the pullback and the percentage move that would be required if we were just going to head straight to a new all-time high, which would require a 93% move from the low of that consolidation. So to me, that's not the most likely scenario. The most likely scenario would be if we break those inside bars, we look for a lower high, tightening range into earnings, but a resistance test is approaching. The daily trend change attempt, we have a higher low here at 33.66. We've got the next resistance level that we have to break at 39.50, and you can see how tight we are just under this level. Bears are defending 39.50. Bulls have to get over that level to confirm the daily trend change, break the weekly inside bars bullish, and then from there, again, not getting too excited as a bull because I do still anticipate a lower high compared to 51.38, but there's a lot of space before that lower high could form. You know, we could break 39.50 and go up to 44 and then top out and consolidate a bit into the earnings report, but it's all about Just like Tesla's all about 820, LK is all about 3950. And it's fairly similar with regards to that setup between the two. BYND, so weekly higher low is now set at 102.43, and to confirm follow through on this weekly big bull move, we have to get back over 135.23 from here. Still a ways to go. Daily time frame needs a trend change. So we had a nice bounce off 102, but anything under 130 was just a lower high, and we have not changed the daily trend yet. So again, just to make that a little bit more visually clear, I'm viewing this as a high, low, double top, or lower high here, higher low, lower high. We got real tight. We broke it bearish. The tightening range broke bearish. Significant bounce. Now the bulls are attempting a daily trend change. So we have to hold 111 and break 123.10 to change the daily trend and try and follow through with that new weekly higher low to head back to the recent resistance. So 111 is the most important short-term support. If that breaks, we're looking back at 102.43. But if we can get over 123.10, then we confirm the daily trend change. So just talking risk to reward, let's say I think this is the daily higher low, and I want to make an entry based off of that. Let's say I enter at 116, and my risk is $5 and some change if I were going to stop out on 111 breaking. My reward, if I'm in at 116, I need a break of 123.10 for this trade to be successful. So that right there would be a $7 move just to break resistance, and any follow through would then just be a bonus. So risk to reward, not ideal. I usually like to have at least a bare minimum of 2 to 1, but we can assume that if we were to break 123.10, that we'd get a few dollars of follow through. So it's right in line there with a 2 reward versus 1 risk. So $5 risk, potential $10 of reward, and that is my brain as it works when I'm establishing trade game plans. Hourly time frame for BYND needs to change this hourly trend with the higher low, break 117.47, and head back to that recent daily resistance. NVDA earnings reaction sending us to look at the all-time high, and we did get it by a couple dollars. Not convincing. We only broke it by $2, less than 1%. So bulls definitely want a bit more follow through over that level. Some profit taking. No red flags on this consolidation, no notable bear volume. Right now, our short-term support level, bulls would love to hold 288.59 on Tuesday. That would keep absolute control. If we do lose that 288.59 level, we're looking at the low of 286, the low of Friday. And if 286 breaks, we're then in a gap fill scenario where there's no clear price levels of support. So bulls want to hold 286 at the worst case, because if that breaks, then we're looking for consolidation. That being said, if you're a swing term holder, then we're just looking for a daily higher low. Anything above, our last daily higher low was 234.75. We've seen a higher low every single day for quite some time. So there's no red flags whatsoever. It's just a question of whether daily consolidation needs to take place or whether we can keep this move going off of that earnings momentum. 295 and 300 will be our short-term resistance levels. NVDA big picture, bulls are in complete control. And just again, 12-period exponential support. This is the weekly time frame. Every higher low over the last 6 months, 5 months, has bounced just above this level, keeping that visual guide and keeping it easy to keep the bulls in control. Work. So work had a bit of some drama just as far as a huge bull move on a technical break and on a little bit of hype that, IBM is this big customer, and then the company comes out and says, hey, this has been the case for a while. This is known information. Nothing new's changed with the company. In my opinion, it's just a technical break, shorts being squeezed, and then the company saying, the price movement isn't based on anything, and then this is the people trading the chart saying, yeah, we know, we don't care, and seeing continuation. So a great recovery, higher low every single day, the last 5 days, and ensuring that this move is for real as far as getting over 27.89, even though the company said this isn't really new information. So to me, it's a purely technical break. Yes, there was some ignition ignited by that hype on that day back on February 10th, but this follow-through is very telling. So we're now looking at the top of this move of 28.38, and then just psychological resistance levels to 31.28. 31.28 is the next clear price level of resistance. So we're going to look at 28.38, 29, 30, 31, just psychological levels, keeping in mind that the hourly uptrend is our guide. When we lose the hourly uptrend, we zoom out and look for a daily high or low to form. Pretty much every chart that we've looked at so far has a lot of space where daily high or lows can form, and work definitely fits into that scenario. So right now, short-term support is 27.65, a little hourly bull flag from Friday. If we lose 27.65 support on Tuesday, we zoom out and we watch for the potential of a daily higher low then looking to form. And again, if I'm looking at this name and saying, okay, I don't want to chase, but I do want an entry, and I'm looking for a daily high or low, I can either be looking at the exponential support as a visual guide, or I can wait for perhaps hourly oversold conditions. Let's say we do lose some momentum and we do start daily consolidation. Hourly oversold conditions in a big daily bull move is when we look for the daily higher low to form. And again, Tesla is our example where that played out very well. Right down towards hourly oversold. When that wick was down at 687, we were right at 30, and then that signaled our daily higher low forming just above the 12-period exponential support. So both the visual guide of the exponential moving average in combination with the hourly RSI being oversold, nice confidence for bulls. Shop. So Shop on the weekly time frame has been exploding. It's been a blue sky breakout bull as well. A lot of profit taking on the earnings reaction, but again, anything above 462.50 is a daily higher low. Look at the daily 12-period exponential support. When's the last time we closed below it? It's been a while. We've dipped and held it time and time again. Even this candle right here ended up closing just above it. So we'll be watching that as a visual guide. Yes, we're in gap fill territory, where if we break the low of Friday, 523.33, the gap to fill is 499.88. But watching the hourly RSI, with extended hours on, not close to oversold yet. We need another clear leg down towards 500 if that hourly RSI is going to get oversold. But we'll be watching the daily 12-period exponential support, which is catching up as we look for a daily higher low to form. And again, it's just the scales tilting. Right now, on that big gap up, the scales were supply of shares outweighed demand. People weren't buying the gap up, they were locking in profit. So after a couple days of profit taking on declining bear volume with no red flags, we look for those scales to tilt, where everybody that's going to take profit or go short has already done so, and people that are going to be looking to buy the dip, that demand for shares will then outweigh supply, and that's when we look to form the daily higher low. So overall, tons of strength out here on all these names. Definitely some highly volatile movers. Always want to be protective with stops, and the trend is our friend. Longer term trends favor the bulls on a lot of these names. I guess Roku would be the weakest name in the short term, but still in a daily higher low pattern, and watching to see if that can be maintained this coming week. Thanks all for tuning in. Do good things, and we'll see you on Tuesday.